Is the stock market going to crash now that the news is out that phase one of the trade deal may not be completed within this year? What's going on, guys? I'm the stock guru, the coolest stock trader on YouTube. And today I'm just going to be going over the news that came out. It's really disrupting the market, and it's all about this trade deal. So basically, as you can see here on this on CNBC, phase one of the trade deal, the news is coming out that it might not be completed by the end of the year. And as you may know, and as long if you've been paying attention to the market, you probably do know that the trade deal has a huge influence on the stock market right now. So this is really disrupting the market. It's given the market a big drop. So I'm going to go ahead and switch over to Thinkorswim here, and you can see right when this the news came out that the trade deal may not be completed, the market just began to crash, and since then it's been having trouble getting back above this level. It's a bit of a resistance forming, so it's not looking too good. Now I'm going to go ahead and break it out into a 1 year and 1 day chart here. Okay, and you can see that we were able to break over these highs, and when this happened, this is right when the FOMC lowered interest rates to, I think it is 1.75%. So I really want to get into that because you're starting to see it curl back down, and it could easily roll over here now that this trade deal is not looking too good. It's not looking too promising that we're going to have a decision by the end of the year. Now, when it comes to the trade deal, we really don't know what's going on between China and the Donald, but we really are just watching what happens, and right now it's not looking too good. So what I'd like to talk about is when the FOMC lowered rates right about here, and we were able to break above. I want to use the analogy that I used with some of my friends who don't know too much about the stock market. I kind of made the analogy that when the stock market is going down, and it's kind of, you might call it a recession, you can think of it as like a sick person, and so you go to the doctor, and the doctor will give them steroids. Well, when the market's down, what we typically will do is lower interest rates, and you could typically see like a 5% deduction in interest rates to kind of fuel up the market and give it some flames, and you can look at that as the steroids. Now, what happened here is when we lowered the interest rates by about a quarter of a point, we were able to push up and make new highs, and that's where we are now. But I kind of make the analogy that it's like you have a bodybuilder coming into the doctors, and he's asking if he can get some steroids or lower interest rates so that he can push up to that next level. And that's kind of what I think happened. That's the analogy that I like to use. And what's scary is that interest rates are below 5% right now. So if rolling over here and this trade news really messes up the market, we're not going to have much room to lower interest rates, and this could just really lead to a long bleed out in the market. That's kind of just my opinion on how things are happening. And this trade deal, the news coming out, I mean, this is really keeping everybody on edge right now. So the fact that it just came out that the phase one might not be completed this year, this is definitely going to be dragging down the price of the market. The market's probably going to see it'll probably roll over here. So I guess we'll wait to see what happens, guys. But if you enjoyed this video, I have a whole entire YouTube channel dedicated to the stock market and economics. So if you like this, I'm sure you'd like some of my other videos. So go ahead and click on my channel, and I'll see you guys in the other videos.